Hi, I'm Jordan Green from the Melbourne Angels. What's going on in this crisis today? Well, I'm a bit of a contrarian, but I'm also an optimist. So the world is rushing down, standing away, going backwards, and I'm still forging ahead. Look, I'm never really overly concerned about how to lose money when I make an investment. I know all the ways that I can lose. I've experienced most of them more than once. The real skill is seeing how to succeed. I don't want to delay to follow others into an investment. I like being in the first round of investment. I do want company. I want other minds focused on this opportunity to bring their experience, expertise, and networks to assess and assist the opportunity. That's why I started the organised angel community in Australia and continue to lead Melbourne Angels. I never invest because of fear of missing out. That is just foolishness. Fear is a very poor basis for judgment. My focus is on finding exciting new ventures and ideas, sustainable disruption that creates new, sustainable and scalable benefits. Be wary. Disruption that destroys value is not a good investment. And of course, right now in the crisis, I'm busy virtualizing and automating the operations of Melbourne Angels and all the other organizations that I work with. Now, there are some opportunities that have been born out of the crisis. We see a broad need for increased self-reliance in pretty much every country, every region, every continent. And we're starting to see some of the excesses of globalization that have taken us too far and put us in difficult circumstances. And then at every level, we're seeing that the shaping of the just-in-time supply line right down to the finest, most efficient economic performance has actually left us with very little resilience. All of these represent interesting opportunities. Now, investing in startups is changing as the nature of startups and company growth is changing. More and more people are starting companies with the hope of winning the lottery of success, and more investors are entering the fray with exactly the same motivation. Many of the new investors are building revenue-based business models around their investment ambitions by providing a range of paid services to founders and to established companies. Positioned as champions of innovation and creativity, these service providers are commoditizing startups and pursuing a somewhat simplistic numbers game investment thesis. For the most part, they are just peddling the same models, methods, and practices as everyone else. In a world with way more people than jobs and a rapidly growing divide between the wealthy and the rest, we need to re-examine the path to success. What is success? One thing I think we can all agree on is that jobs matter a little bit less than teams. What are we doing to support our portfolio? Well, for angels, it's mostly business as usual in that regard. We have to provide the moral support for our founders who have the need to struggle in this environment, who are challenged by the overwhelming changes that we're going through. And we have to provide the morale support as the founders have to figure out how to make the really big decisions. We are always offering a safe haven for our founders, a place where it is vital that they can come to seek and explore, to get coaching and help them find the right changes to make to their strategy and execution. And by sharing our experience of having weathered economic shocks in the past, we can help them even in this particular crisis. It's important to remember the startup journey is always Darwinian. There are many businesses, not just startups, with business models that were never going to work, but they were buoyed up by the optimism and inexpert investors that exist in the bubble times that we've only just left. No one should be propping up those businesses. They had already failed. They hadn't confronted that reality. But we do have to make additional investments in our portfolio companies. But as always, those must be dependent on the actual offering for each round. There must be a compelling reason to invest. Life support for its own sake is not a smart investment for anyone. Now, the word is out. Now is a great time to be making investments in startup companies. My best Australian startup success was invested in the dot-com bust and delivered a 34 times return. My best ever was invested in the Asian financial crisis in the 90s and delivered a 100 times return. Back in March, I wrote to our members and to other angel investors around the world about the counter-cyclical nature of startup investing and the great opportunity presented by this crisis. I published a version of that in April on Medium and LinkedIn if you want to have a look. The timeliness of this opportunity is better known this time around. That and the quintessential optimism of founders means that we as investors are still facing the challenge of cutting through the noise to find the quality, to find the best opportunities that fit with us. At Melbourne Angels, we don't have a specific sectoral focus so much as an opportunity focus. We want companies with a compelling and novel solution that's satisfying an unmet need, for which there will be an abundance of customers willing and able to pay. What's the world going to look like post-crisis? Okay, well, how things will play out for you will depend very much on who are your customers, your target customers. Initially, consumers and businesses may not be all that different because the individuals making the decisions will be more strongly influenced as people than as managers. When we believe the pandemic is over, there will be a brief blush of experimentation, a time when our resistance to change is very low and our search for a path forward is unfettered. It may only last days or weeks. So your business can take it, if your business can take advantage of that, get ready now. Right now, most people and organizations do have very low barriers to trying something new, especially something digital and low risk. So again, if your business can actually gain customers during this pandemic, act now. Longer term, there are likely to be persistent policies that foster a greater degree of self-reliance, as I referred to earlier. And that self-reliance will sort of be on each continent. So for Australia, it's quite unique. We have the whole place to ourselves. Origination and distribution of products will be balanced against the disruption of supply chains. We may avoid having another world war, but we will almost certainly have more pandemics in our lifetimes. Similarly, when we restrict our movements or lose critical skilled personnel, our vital infrastructure becomes unreliable and possibly unsustainable. More effective and agile automation protects us from those outcomes, and that automation will demand greater security. These are trends already in evidence, but they will accelerate. That acceleration will drive another existing trend, the changing nature of work. The 19th century model of a job will persist, but fewer of us will be able to enjoy that kind of job security. The 21st century model of work will require very different forms of remuneration, banking, insurance, childcare, aged care, transport, hours of operation, mode of communication, incentives, leadership, social structures, and so much more. In the future, our skills will get us work, but they may well not get us jobs. Now, if you're currently investing, I'd like to caution you not to fall prey to this idea that you have an obligation to pour more money into failing companies. Your only obligation is to make investments you genuinely believe will be successful. So the key question, as always, is what do you need to believe to invest in this company? If you've already been investing in startups, then you have formulated an investment thesis. It may be a very formal and analytical thesis, or it may be more a seats of the pants type approach. Now is not the time to doubt your considered position. You must be open to adapting, but don't break your own model. While the power in the deal is squarely back in the investor's hands, don't take advantage. Don't be greedy. Remember what your thesis says about the best terms of investment. and stick to that. Remember, your perspective was formulated for the life of your investment, and this crisis is only temporary. Don't cripple your own strategy. For those choosing deferred instruments like connotes and SAFE, consider your actual expectations. What do you expect the value inflection points that trigger the next round to be worth? Do you expect your companies to only appreciate in value by 20% between now and their next round? Or perhaps you expect them to double in value? For the latter, you're going to need a 50% discount to the next round, or a combination of discount and cap that gets you there. Don't miss out on your risk premium. This isn't greed. It's what you are buying with your money, just as the founders must consider when buying your money with their equity. So what do the successful opportunities really look like? Well, here I'm just going to speak for myself. My preference is for companies that are developing truly distinctive technology, an enabler that empowers other companies to do better or faster or cheaper or all of the above. These are the companies most likely to be able to achieve a strategic value exit based on genuine, defensible, and sustainable value creation. I'm less interested in ventures focused on capturing millions and millions of customers at tiny little margins. These are mostly headed for financial value exits at best. That means investing a lot of time and a lot of money in growing very substantial revenues and profits. That is usually a long journey, and the longer it is, the more it will cost and the higher the risk that it fails along the way. Founders who want to restructure an industry, supply chain, or distribution chain may only be a business model innovation. To succeed, they will need to have both a deep, insightful understanding of the status quo and privileged, advantaged access to dominant players who can drive adoption of the new version of the industry. So people like and want to help who are trying to do something that's really worthwhile. So that does mean they need to be ethical, they need to be passionate, they need to be insightful in how they're going about things, and they must have the personal and leadership capabilities to get the job done and the relentlessness to see it through. So I'd like to finish a simple view. The only failure is failing to learn and do better next time. Don't be afraid of failing, because everything you learn is the next step towards success. Thank you very much for your time. And if you'd like to reach me, these are my contact details.